What up, investors, and welcome to another episode of Phanance, where I keep you plugged into the markets. Now, before we dive into last week's events, let's take a step back and look at the big picture, shall we? So here's a one-year chart of the three major US indices, the S&P, the Dow, and the NASDAQ. As you can see, the market appears to be clawing its way back from a brutal sell-off that happened at the end of the year. That was a scary time, folks. Now let's drill down into what happened last week. Here's the 5-day chart. Notice that the week started out a bit rocky, but ended on a high note. All the major indices ended up in positive territory for the week. Okay, enough with all the charts and squiggly lines. You probably just want to know what investors were focused on last week. I'd say the three things that were really top of mind were the IMF report, semiconductor results, and the temporary lift of the government shutdown. So heading into the week, the IMF issued a report where they lowered their growth expectations for the global economy from 3.7% to 3.5%. Now, this really bummed investors out. Investors generally want to see steady to accelerating growth, not a slowdown. Yo, remind me what the IMF is again? The IMF stands for the International Monetary Fund, and it's an organization made up of 189 different countries, and its job is basically to keep an eye on the health of the global economy. It also lends money to countries when they get into trouble and helps them figure out ways to expand their economy. Moving on to the next key event of the week, semiconductor results. During the week, a bunch of semiconductor companies reported their quarterly earnings, which is basically a report card that publicly traded companies are required to publish every 3 months. Here's a quick list of companies that reported. What you should take away, though, is that the report cards, along with management's outlook, were pretty good and better than expected. Now, why is that important? Well, semiconductor companies make things like microchips and transistors, and pretty much everything nowadays has a semiconductor device inside it, whether it be a cell phone, a car, medical devices, or a refrigerator. So many investors look at the semiconductor industry as a gauge for the health of the overall economy. Better results for the semiconductor space bodes well for other industries. Last key event of the week was the temporary resolution of the government shutdown. Now, prior to this, investors were pretty worried that the 800,000 or so government employees would be severely impacted by the shutdown. They weren't getting paid, so they were probably less likely to go out and spend their money at a restaurant, go buy a new pair of shoes, go get that haircut. And that would impact and hurt the overall economy. But on Friday, the government announced that it'll reopen for 3 weeks. And this likely gave investors hope that a more permanent resolution was around the corner. And let's hope that's the case. So how do we make sense of all these events? My personal take, the news last week wasn't particularly exciting, but nor was it anything to freak out about. So what I'd say is that it's still an okay time to invest in the market. I would just do so with caution. All right, hope you found this week's episode helpful. If so, hit that like button. And if you want to stay plugged into the markets, consider tapping subscribe. Until next week, stay up and invest wisely.
I'm still fucking boss, so it's a burden. Everything I serve, it like a bird, like Russian, Dutch, and German. Floated, making